Welcome to Options with Hans. I'm Hans Albrecht, of course, your friendly neighborhood options trader. I spent 15 years as a pro options market maker, making millions in profits because I had to. I went 15 years only getting a check if I made a profit. That is how you learn this game. I then went on to manage up to 12 income funds, income ETFs. I revolutionized how income funds were run because they were being run very, very poorly. And some downside protection funds as well. So offense, defense, both of these things are what I infuse into everything I do. So again, as always, this is for educational purposes only. Your trade, your responsibility. And if you're good with that, let's dig into today. I think we're entering that next leg of a bull market. I've been saying this for months. I sound like a broken record. It's going to be powered by AI inference. We're already seeing these businesses with so-called wide moats being challenged. And in some cases, those moats are going to be collapsing entirely for some areas of the economy. It's happening fast. You want to make sure you're in the right names and not stuck in the wrong ones. 2 months ago, I pointed out my favorite shorts out there, which were Upwork, Fiverr, Salesforce, and Adobe. I said those were pretty bad bets in that area of freelancing software. Now, I think they've overdone it a little bit, and I'm actually long some CRM right now through some interesting structures that people get in the Discord community, in the trading community. But I believe the time is really now to pay attention to this stuff. I really feel the next batch of multimillionaires are going to come from this massive regime shift that is out there. It's a once or twice in a lifetime opportunity. But you've got to be right. You've got to be on the right side of things. You've got to be listening to people like myself. This is not my first rodeo. I rode through the dot-com run up and then downturn. People pay me a lot of money, $17,000 for mentoring, but you do not have to spend that. Leaps and crypto programs are available to anybody. The reviews are off the charts. I am here to help you find opportunity. So please like and subscribe. Don't forget to grab those free options cash flow blueprints and ebooks down in the description. They start from the very beginning for those who want to learn my favorite ways to generate income. And again, our Labor Day special is on right now. You get 1 year of Leaps Trader, including Leaps Core, Leaps AI, Leaps Explosion. You get a year of Crypto Income Trader as well, where it's all about crypto, only smarter. We are looking for smarter, less expensive ways to generate exposure. Turbo trades, we're going to do one of those today. In fact, we're going to have a little bit of fun here. Income trades when it makes sense. The whole kit and caboodle. We closed a Ethereum trade 35% in 2 days, another one 80% in a couple of weeks. And we've got some income trades working for us right now. They're actually doing well with Ethereum up quite a bit today. So this is really, really fun. We're having a lot of fun. It's a great market. I will not lie to you. That always helps. Today, though, we're going to talk about Snowflake again. I talked about this a few months ago, and I've got a very, very special trade for you that I've really kind of focused on because it uses something that I call edge, right? This is a professional style trade because you're using something that really makes sense, which is selling expensive options skew. So again, today's pick is Snow. We're going to do a really cool trade. A little bit like the SOXL that we did a few months ago. Some clients made 500-600% on that. More than me, way more than me. I love it when clients one-up me. That makes me happy. They are getting more than they expected. So this one could be similar. Let's dive in. Snow is one of those data crunching, warehousing type companies. You bring them in, they take all your silos of data, and they start to make sense of it. So think of ChatGPT has said that they are throttling back their compute. They cannot handle what is happening out there. So I don't know if you guys know what a token is. You're going to hear that word more and more. How many tokens are being processed? Well, think of a token as basically a word or a letter, an apostrophe. 1,000 words is probably like, 1,200 tokens, something like that. So when we think of data processing in terms of tokens, so when you type something in, you ask ChatGPT to do something, it is using tokens as it sort of counts up all these chunks of text that it has to use as it processes things. And so about 16 months ago, Google said that it was processing about 9 trillion tokens. That number today is over 900 trillion tokens. Okay, so this is massive. What comes after 900 trillion? A quadrillion, basically. So they're starting to process close to a quadrillion tokens. From 10 trillion to 999 trillion tokens, basically in about 16 months. That is unbelievable. We are starting to create data like there's no tomorrow. If you think we are near the end of AI, near the end of this boom, you are so off course. You better try to find a map and find your way back. This is absolutely only starting. This is the first pitch of the first inning in terms of that inference phase, when this starts to work its way into all areas of the economy, right? We talked about that 95% MIT study, complete rubbish. I mean, if you look into it, they're sort of talking about slightly different things, but basically saying all these companies have no clue what to do with AI. Of course, it's early. The tools aren't there. The actual engine has now been created. Now we have to deploy that out into the economy. So we're going to talk about the story, multiple slides. We're going to look at option pricing, of course, and then we're going to get to our super turbo trade, which is always the best part right there. Okay, so let's quickly go over a couple of these things. So number one, inning one, bullish momentum. They just crushed earnings, up 32% in revenue year over year to 1.14 billion, beating across the board. So pre-market, we saw a big jump, got up to about 20% up on the day. It was amazing, and it's pulled back a little bit, but the takeaway is snow is running. People are starting to come to the realization that it is early innings. This horse is out of the barn and not slowing down. Next, this isn't hype. This is utility. So again, think of this as the printing press in every single office. AI adoption is still just starting. Critics who say that 95% of companies can't figure it out, of course not, they can't. The infrastructure's still being built. So this is like saying this is over is like saying in 1440, they invented the printing press. Gutenberg invented the printing press, starting to revolutionize the world. And 5 years later going, you know what? I think that's about it. Yeah, I think it's run its course. We have all the books we need. Right. It's not happening. So a lot of companies are yet to get on board and fully use this particular technology. And what does that mean? Well, there's a massive TAM, that is a total addressable market, and an incredible moat here. So Snowflake is not just growing, it is cementing its moat, which is going to be warehousing, lakes, real-time snowpark, Cortex, some of these names we're going to hear over time, Unistore. It's everywhere that enterprise data lives. This is what Snowflake does, right? They go into companies, they go to like a telecom company and they say, look, you've got 1,000 different silos of data. This is how we're going to put it all together. We're going to make sense of it. We're going to figure out where to save money. We're going to figure out where to make money. We're going to figure out where to cut costs. We're going to figure out where to find productivity where you didn't even realize it existed. This is where this economy, the world economy, for those who harness this, is going. That's why it's going to be very difficult for analysts to actually figure things out over the next couple of years, because let's say 2 to 3 to 4 years, they don't know. This is literally a regime change. The world is absolutely changing all around us because of these technologies. The cloud analytics AI market is set to top $1 to $200 billion by 2026. And so what does that mean? Well, a company like Snowflake that gets in there, right? It gets into this business nice and early. There are some competitors, right? Databricks, things like that. Consumption model. That means more AI means more usage, which means more data, which means more revenue. Remember, the gears do not stop turning in that inference phase. So that's why the tools are going to be very, very sticky. And when companies start to use this product and they ingrain their processes into something that Snowflake is providing for them, it's very, very difficult to leave. Metrics and valuation. So by the numbers, 1.14 billion, as we mentioned, up 32%. Product revenue, huge. 125% net revenue retention. We're going to talk about that in a moment, how important that is. 654 customers spending $1 million or more a year. That is up about 40 of those customers. And remember, we're just getting started. They raised their guidance to 4.4 billion for fiscal year 26 product revenue. Free cash flow margin, 25%. So compare that to a Palantir that's growing faster, but is trading at 117 times sales. Databricks at 27 times sales. What's Snowflake? 17 times sales with a PEG of 1.1, right? That's the price earnings to growth ratio. One thing that's very important to watch with growth companies. Snow at 1.1 versus Palantir at 6.2. 1.1, anything around 1 is pretty good. It assumes some amazing growth, but 1.1 versus Palantir is at 6.2. These are in different universes, these two stocks. That makes me think that Snowflake is really the much, much better value in terms of, which one is undervalued relative to its growth prospects. You've got to say that Snow is there. Slightly different platforms. So let's look at just a quick little summary here. Net revenue retention. I wanted to talk about this 125%. That means customers are not only staying, but they're expanding their spend. They're embedding Snowflake deeper, deeper into the workflows, right? They're not just spending 100% of what they spend, they're spending 125%. They do not leave. They stay, they spend more money, they push more of their workloads and data sets through Snowflake. That makes it very, very difficult to leave that ecosystem after a while. Net promoter score, that's another layer of validation. Customers see Snowflake as very mission critical, right? They love it, they use more, they spend more, they tell friends about it. Inference tie-in, of course, trusted high quality data. This is going to be very important. You're not just going to run this through ChatGPT. You're going to go with a company that you can trust that's going to give you real non-hallucinatory results. So that NPS of 72 of 50 is considered excellent. Above 70 is considered world class. Snowflake has a 72. That is amazing. Future growth visibility, well, remaining performance obligations, so that means basically people who owe them money, who have committed to a certain amount of work, up 33% year over year, slightly outpacing revenue growth, always a good sign. That provides that visibility that demand isn't cyclical, right? This isn't a hype. This is locked in. This is contractual user growth. Management explicitly linked this backlog to AI and data initiatives, right? Of course, they talked about AI on the call. You'd expect them to do that. They're saying much more of their workload, of their business is coming from AI. Remember, first pitch of the first inning. Think of how that's going to look in a year to 2 years. Inference tie-in, of course, everyone's going to want to get on the AI train. Remember, I talked about that with Palantir. I said the phone is going to be ringing off the hook. Palantir said we can't even handle all the business. It's going to be incredible. Of course, cash flow from revenue from operations is positive. Always an amazing thing to see with a growing company like this. Then data as the core of AI. Well, let's bring it all back home here. Data is the core of artificial intelligence, right? The more proprietary data you have, the better capable you are of building AI systems. That's what Snowflake really capitalizes on, enabling enterprises to take their actual real world proprietary data and turn that into inference, not just a bunch of storage sitting around, right? They're taking all that luggage in your closet, all those things you got stuck in the back of your closet. They're saying, let's put those things to use, right? We're not just talking about storage here, we're about putting things to use. That is the pivot from training on public sort of data sets to running inference on enterprise grade assets. This changes absolutely everything. So let's look at some of the option pricing. The term structure, that's option pricing across time. We can see that we kind of come in here. Of course, it makes sense. We don't have any earnings coming up. The market is generally quiet at this point, although things sometimes change in October. But we see that this is starting to incorporate those sort of seasonal effects, and then eventually earnings. We got a little bit higher pricing in here. So our short-term options, we can see our rank and percentile down around probably an average of about 10 at this point, which is very low. This is not a stock I'd be big on income trades, given that. I'd have to look at the skew to see a little bit more on that. But this is not really a tempting stock for income trades. So this is why this sort of turbo is going to really kind of play into this. I'll show you in a moment. So we've got this short-term pricing really coming down, getting very close to those lows. I don't think it's really that cheap yet. I think it get a little bit cheaper. But what I want to do is I want to take a look at some of the longer-term period option pricing here. So we can see that the pricing has come in as a result of the earnings being over. That is your typical behavior. You have pricing rising up into earnings and then collapsing a little bit afterwards. You don't see as much usually at the 270-day or a little bit longer term options tend to not be as reactive, but this is quite a volatile stock. So they are reactive, but we can see that we're right down to basically the lows that we've seen over the years, which is something that always interests me when I'm looking at things like turbos, things like leaps trades. I love to see that. If we go just a little bit further, it's not really going to change very much at all. But we can see right here, we are just in the basement on option pricing, which is really nice to see from the perspective of somebody buying options. So let's take a look at the skew here. Really nothing much to see. It's actually sort of one of those strange flattish skews that we can see kind of hugging that zero line, which you can see is very kind of, typical of something that's fairly flat. A little bit unusual to see that upside getting compressed for such an explosive stock, but, maybe not that unusual because it isn't something like, it's not a Coinbase type stock. So it's fairly sort of subdued at this point. You can see we're sort of bouncing up a little, puts getting maybe a tiny little bit more expensive, which makes upside rather interesting. So if I look at that smile, we call it the smile, it's more like a smirk. If you sort of look at this very high on the one side, although it does kind of curl up a little bit. So we do have a little bit of a smile here. Now, if we go out to some of these longer term expiries, we can see that this changes just a little bit. It gets a little bit more like a smirk, and you can see these out of the monies trading not only at those cheap levels that I showed you, but that upside call skew, very cheap. What have I been saying lately? I talked about Google, even though I was negative on it at one point. I said, listen, that upside can serve as a very, very nice play, a very nice hedge, because it has that upside, cheap, explosive potential, and that's exactly what's happened. Google has just run up about 20-25% very quickly, and they indeed did underprice that upside. So those are the kinds of things we look for in Leaps Trader and some of the other programs, and something that you might be interested in learning. Now, let's take a look. So one of my favorite structures when I think things are going to do generally well, but I'm not sure exactly when, right? So we've got a little bit of time here, and we want something that isn't going to suffer too much from erosion, right? We're always going to think about our Greeks, thetas, or our theta decay. And so, of course, we like long delta strategies, but when we're not sure, we might use something like a butterfly, a broken wing butterfly. We might use a call spread if we have a little bit more conviction. And a turbo trade is very volatility agnostic. I love that about it, that it takes away that need to be right away, which, as you know, if you follow Leaps Trader and other strategies that I do, you know that I like to give myself time. I like to give myself a chance to be right, and even give myself a chance to be wrong before I'm right. So it's very kind of vol agnostic. It doesn't so much care about how high or low option prices are. They're quite low right now, so I wouldn't say high prices are really the big problem here. But I would say that we still have that potential for some decay. And so we have one part that is financing the other part. So what I would do is I'd go out to a March 2026. Now you could go December, January. I like to usually give myself at least 3 months on these things. So you go out here and you look for the delta that I prefer. Let me bring up a delta column. Here we go. And so I'm going to bring up about, maybe like a 23 delta, something like that. So maybe sell these at 11.10, the March 26 190s, which of course are about $40 away right now. So a little bit under 20%, let's say. And we're going to sell that credit spread down there, and we're going to get, we're going to set our sell strike to the 190, and then we're going to go down. Since this is a little bit higher price stock, I'm going to be a little bit more generous with the room to the downside. So I wouldn't even mind picking a 165, $25 spread. It sounds like a lot, but we are always comparing this to a cash secured put, which is of course going to give us the full downside of risk. And so in this case, we want to go a little further. We're going to get that nice 585 credit, which is, about 35, that's about 6 to 1. It's not exactly amazing, but it's okay, right? This is the problem. In a lower vol type environment, you're not going to get that amazing credit. But what you can do is you can turn this around and use that credit and pick up something like, I usually like, it's about the right delta. So I get out here and grab this one for maybe about 19 bucks. We're going to buy this vertical, and we're going to, so we're long that 260 call out in March 2026. So we're always going to make these the same expiry. And then we're going to go out a little bit and figure out if I'm spending about 19 bucks on this thing, I could probably, if I'm bullish on this, I could probably sell these for about 11. That's going to cost me about 8 net. It's not going to quite be covered by this credit over here. But what I could do is I could go in and do the 280, right? So let's notice that the $20 280, which is pretty good. I did one of these the other day, and it didn't give me a very nice spread to the upside. But right here, you can see that we're basically receiving 585. We're spending 560. So we're actually putting this on for a net credit. That is always a very nice thing to be able to do and still get a decent spread on that upside. So let's take a look at what this can look like on our risk profile. And this is it right here, right? So we kind of have this lovely little shape here that we can see the expiry line. This is your real-time line. We can see that there's a space in between here where we actually make a little bit of money no matter what. So we have room to kind of, for the stock to move around. And as I said, it's agnostic, right? So if this starts to collapse to the upside, which we always have to be prepared for, right? That's the problem when we own out of the money options. Those can collapse a little bit more quickly, although out at this expiry, you're not going to expect to see that too much. And certainly the skew is cheap, as I said, right? That's one of the risks that you don't really want, and you've mediated that a little bit. You've mitigated that a little bit by the low level of vol overall. But if this starts to get hurt, you're probably going to be making it up on this side. You're selling that downside juicy skew. Remember, this is that pro trade that sells something expensive to buy something cheap. Remember that skew curve I showed you, that smirk? That is what you are playing. You're playing the benefits of that particular shape. So this is a trade that can do really, really well to the upside. You don't have to worry about it too much. And this is what I call my turbo trade. I'm going to be doing a service at some point that is really going to focus a lot on these kinds of trades. I think these are really, really exciting trades, a lot of positive things about them when it comes to trading options without some of the negative things that you get. So you've got about $2,500 of risk to the downside, less that credit you got. But remember, we're spending that. And then we got $20 risk to the upside. This is covering this. So basically, we've got for one lot, you've got about $2,500 of risk on something that you think has the potential to go up. Now, how do we manage this over time? Well, as it goes up, you're going to see that this 260-280 is going to take on positive deltas. And when it does, you're going to want to adjust those deltas. Now, I have some personal rules that I teach in mentoring and in my programs and Leaps Trader, et cetera, that can kind of guide you as to how to do this. Because you really want to be aware of where this thing needs to be rolled in order to either close it and say, thank you very much, it did well, or to potentially keep the party going. And there are ways we can do that. There are 3 or 4 different ways that can do that while reducing risk. So we can leave that for another video, but I hope you guys enjoyed that, and we shall see you in the programs, in the Discord, or on YouTube. Take care, everyone.